is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hey, Robert, how you doing, man?
Yes, and thank you for taking my call. I wanted to let you know that I've been a subscriber for a couple of years, just different members of your team, and I really enjoy it. But really the reason I'm calling is to express my sincerest gratitude for you providing that information yesterday on the small business grant. I'm a small business owner and primary breadwinner for my family, and if I can get that money, it's going to really mean a lot to my family. So
that's awesome.
Thank you for taking the time to do that.
No, well, listen, man, we appreciate you growling and prowling with us.
Now, Tom O'Brien.
Good afternoon, everybody. Thanks for tuning in to the Tom O'Brien Show just after 3 p.m. Eastern Time. And we got a couple different markets shaking right now. S&Ps, we make a record high, 7,000 in the futures for the first time ever, 7,006. Excuse me, we back off a bit. We're trading at 69.83 right now, off by 4 points in the S&Ps, but that's a record. Speaking of records, Dow. Record on the open, 49,876. Almost hit that 50,000 mark. But boy, since then, you're down by 500 points from the highs. We're off 350 points on the session. We got some divergence. Whether you're talking about housing stocks and defense stocks, right? And when I say housing, it can be housing. It can be institutional investors like Blackstone. Russell, negative by 5 points, 25.91. You got Bitcoin off by $1,400, 91,420. Crude in focus, 56.22. Had a great discussion with Teddy Kegstad on the morning program. And yeah, I mean, what does it say about crude when you cannot catch a bid with everything going on? Look at the pop you got on Monday. Okay, imagine, we're digesting Venezuela news on Monday. And today you're ripping lower with more volume than you did on Monday. In a normal world, and I say normal, Monday would be the day, right? We invade Venezuela over the weekend. We overtake the biggest oil reserve in the world. All of the action that follows when futures open Sunday night into Monday. And with all of that in focus, today's the day that the volume's coming. And we're breaking the recent lows, 56.22. Crude off 91 pennies. You jump over to gold. Negative $30 right now for gold. 45.12 was the high yesterday. We're trading at 44.65. Silver's had some volatility. You talk about it, man. Silver up to 82.58. I think we're about 10 pennies away from all-time highs. Yeah, all-time highs on the futures, 82.67. You get within 10 pennies of there, and we sell off a bit. We're about $4.50 off those highs. We're off $3 on the session, off $3.73. And let's jump around to some of the stories. So Blackstone and housing shares. And as I was mentioning, you know, the details aren't there, obviously, right? The devil's always in the details. That's what's going to matter. You say to yourself, okay, is this good or bad? For housing owners, investors, housing stocks, is it good for just local real estate investors, right? I'm in the real estate business. My head goes there, as I know many of you out there listening as well. The home building index was off 2.3%. Okay, we'll go through some of the home building stocks, but Blackstone, man, you talk about a quick sell-off. Okay, you spiked down to 147. We've climbed a bit. You're still off by 5% right now. Okay, Blackstone, I believe about $120 billion company. What are we at? Yeah, $120 billion where we are right now. So you're down 5%. We're probably, what, how many shares outstanding? Almost $1,773 million. Down about 5. So yeah, you come into the day at like 127 billion, 7 billion wiped off on market cap for Blackstone. The home builders, you know, and in theory, if you take out investors, yeah, you know, it would make home ownership easier. There'd be less demand in the market. And it's just the most simple economics there is, right? If you eliminate one person from being a bidder, you eliminate their demand. There's less demand. Where does supply equals demand? Where they intersect on the curve, it's a lower price. You got less demand in the market. Now, what if it brings back in more people, right? Well, rates are still going to matter for that, okay? It doesn't just matter that institutional investors can't buy homes anymore. Are they going to be able to keep the homes they have? If they have to sell them, how is that price going to get figured out? When do they have to sell them by? And you still have to be able to afford the home on the current interest rate structure, which is why I think the battle, I've been talking about it, between the 2-year, the 10-year, the Fed. When the Fed cuts, if we don't get mortgage rate cuts, anything's on the table on the short term in terms of trying to get the 10-year down and which would translate to the 30-year mortgage. We jump over to Lennar. So KB off 3.4%. You jump over to Lennar off 2.25% right now. Excuse me, D.R. Horton off by 3.2% right now. And from there, you jump to the defense companies. So on the heels of flying into Venezuela, President Trump said he wouldn't allow defense companies to issue dividends or buybacks of their own shares until they invest more in production and research. In a social media post, and here's the kicker on this one, executive pay should be capped at $5 million until they build what he deemed new and modern production plants. And yeah, the whole business model of defense contractors, folks, in terms of the overrun, right, the backdrop, the way that the government pays for all those overages versus the normal business course of running a business where you're taking the risk, right? A business comes to you, they take the risk, they make the contract, versus the other side of where they come to the government with ideas, they pitch the government ideas, and then the government funds those ideas to come to fruition, which is basically how a lot of the defense contractors work. So that's the backdrop of what's going on here. And you better believe with the amount of money that they're getting paid, that there's terms that the government can set when they're paying them that money, what they can do with that money if they want to participate in government contracts, period. Where it gets complicated is that no executive is going to make more than $5 million until this very vague goal, right? Imagine yourself in that role. And so, as is always the case, if it was this simple, right, you'd say to yourself, well, that's great, let's do it, right? What do you think the greatest leaders in the world are going to do when it comes to ever signing up to be a CEO of a defense contractor? That's the last place they go. These CEOs are making about $24 million a year. The average CEO in the S&P 500 making something like $17 million a year. Okay, they're not making $5 million a year. So why would you ever get the best and brightest out yet? That's the simplest argument that always gets. Otherwise, let's just cap bank stocks until everyone can afford a home. Let's just cap home builders. Let's just cap every CEO in the S&P 500 can't make it, right? What would happen then? They'd go somewhere else. That's the argument. I don't think you want to cap it at defense stocks. Now, that doesn't mean that the system can't change, but in this day and age with technology, hearing that number that somehow executives aren't going to make more than $5 million, these companies, folks, right? I was looking it up during the break. Raytheon. Let's go through a couple of them. There's your decline from Raytheon, down from 194 to 187. Raytheon, $251 billion company. You're not going to be making $4 or $5 million running a $251 billion company. We'll see how it plays out. Market's reacting. We got equities. S&P's off by 12. NASDAQ up by 50. We're coming back, folks. We'll take a look at some equities.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey. Because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. Raytheon down by 1.7%. So jumping through some of these defense contractors, it's been quite a run, right? From the April lows of 112, the Secretary of War and the President going into Venezuela. You know, I don't say it kiddingly, folks. Okay, you better believe it's a good time. Now, today, a little bit of a readjustment. We're trading lower, off by 1.7%. Going to be interesting to see in terms of capital, human capital, right? This going rate right now, you know, it would be an easier way to make sure that you save money on defense contractors is that you just limit all the CEOs only make $5 million, right? That way, that eliminates the whole competition. I'm saying, why would you go work at these companies if you're the best and the brightest in the world, you want to be an executive, if your pay is capped at $5 million? Now, hopefully you have some proud men and women that want to make weapons for the government, okay, and America and keep us safe. But outside of that, in market forces, all the other companies are paying you a lot of money. And when you're at this level of a Fortune 500 CEO, you're not just centralized to a company like Raytheon. You're competing to be a CEO of that company. You better believe you can go somewhere else and get paid market rate for $25 million. You're not going to go and make $5 million. It defeats every argument that's been in play for 20, 30, 40 years. Otherwise, let's do it, right? Let's just cap CEO pay. Exactly. Great idea. I often say that the norms that Trump is setting right now to provide merit for the ability to do it all and to do that for any president, hard-pressed with how you push forward here. And when you're talking about defense contractors, I'm not worried about a defense contractor CEO making $6 million a year. Okay? The CEO packages we talk about are not $6 million a year. They're not 10. They're not even 20, right? They're, Zasloff at HBO getting $400 million, $500 million to basically run a business so bad into the ground that it's got to get sold off. Okay? I mean, you go read the story of Zasloff and running Warner Brothers and how just before this deal got done, he had to basically get a whole new tranche of options because the stock was so worthless that when he signed the last deal as CEO, his options had to get above the price of 30 to have any value. And he was like, we all know that that's not happening anytime soon, right? So I've tanked the company so much that you got to give me much lower options to be able to make any money back. And what's he do? All he does is he gets the company right back to where it was when he got the first tranche of options. That's CEO pay that you're worried about. Okay? So $5 million is a ludicrous number for a CEO. It is. If you're at the top tier of a defense contractor managing a $250 billion market capitalization, yeah, that's probably the bare floor that you're making, and rightfully so. You know, Zaslav getting $500 million or even more to just manage Warner Brothers Discovery as it tanks and then has to get sold to the competitor over a period of time. They could have competed. There was no think about the amount of fumbles this company had. Not to go on a Warner Brothers rant, but think about it. It became a running meme how many times they changed their name from HBO, and then they somehow took one of the greatest brands out of their name, known to the entertainment industry, with HBO, and they just made it Max, and then they put HBO back, and then they got sold. And meanwhile, their library is one of the hottest items out there, and they had it the whole time, and they couldn't. So $5 million, yeah. Now, jumping through some of these companies, yeah, Northrop Grumman, look at it, NOC. Okay, you're down by, check this one out, right? Let's see, put it on a daily. Yeah, that's your day. Down by almost 4.5%. So RTX was almost $250 billion. This company, $83 billion company. Some of the other ones mentioned in here, yeah, Lockheed Martin, RTX, General Dynamics. Lockheed Martin down by 3.7% right now, $116 billion company. General Dynamics down by 2.9% right now. Another $100 billion company. And yeah, Raytheon is 251. So, you know, corporate accountability, all that stuff, it makes great sense. But every argument that's used against capping executive pay is in play, and you're talking about defense contractors. So we'll see how that works out. We'll see how home builders, but guess what? It's real, and the market's saying it's real. And boy, you talk about quite a pullback. Hey, you know, part of me says, okay, maybe this is the exhaustion. You get it all back. You go right down to the doldrums of 2025 at the April lows of some of these home builders. Lennar of 2.5 right now. Lennar's got some nice volume. You back this up to that volume from November 17th. We put it on a daily. Excuse me, look at all that volume on the acceleration. This is a great pullback on lighter volume. You know, you had one selling day on their earnings. That's it, though. This equity Lennar has traded from 133 down to 100. It's not that much volume, folks. It's not. Look at this chart compared to what we were doing here. We got buyers, man. You're below this area. You're on lighter volume. These home builders are on my radar. Okay, D.R. Horton, not quite as pronounced, but there's your run up in similar territory, some decent volume. And even on a day like today, you're not ripping lower with volume. KB Homes, yeah, not quite the same strength. This is the area of strength that it is. Lennar really had it, man. That was nice. Lennar might be the strongest one out here. You're down by 2.6%. And the greatest part about the Lennar trade right now, if you're looking at it, is your back's against the wall, man. You know, pick a number somewhere around 100 where you're getting out of this equity if you're getting into it. It's a nice trade right now where you are. It doesn't mean you won't be wrong, okay? But you dip below that level, maybe you scale into it, and you give yourself a stop at 95 or something. You got lows out here of 98.42 back here in the April lows. You don't want to go below this level. Okay, we got a lot of strength up here from about 124 to 132. Even this first bar around 120. But we haven't had rapid selling. That's your weekly, but you check out the daily. Nothing sticks out. You know, look at this decline from 120. You had one big day on their earnings, and it was less than ideal earnings. Let's put it that way. Okay. But the other side of that is, and you half say it jokingly. Okay, and you talk about it in the den exactly. Why don't you just take a government share of the defense contractors? Okay, that used to be a joke. That ain't no joke. Why doesn't the government just take and say, give me 10%, dilute your share ownership, and give me 10%? You want to keep your company? You want to be 100, 200? I mean, that's what's at the stake right now. Same thing with home builders. Why isn't the government doing that? We need homes built, okay? You don't need just home ownership. We need them built. We need more homes, and we need them built. So one of the greatest ways you could do that, I talk about all the time, you got to incentivize homeowners versus the institutional. Now, Trump bans institutional. We'll see how that goes. One of the easiest ways, I'm always surprised it doesn't happen, taxes in play, of course, is you could increase the homestead exemption for homeowners that are going to reside in their home, which is how you get a homestead, okay? And all it does is it allows institutional home ownership, but it gives people a leg up through tax incentives to buy a house and live in it. That's it. The next time somebody has some big conversation, there's some great articles written. Maybe I'll try and find them and post them in the den. Okay, I will. But it's one of the simplest things that many people, many different towns, states could do is increase the homestead exemption, and all you're doing is giving a tax break to people that live in their own house. Okay? And the bigger you make it, the better competitive, the more competitive they are against those institutional investors. It's a leg up for people actually living in their house. You can still own it as an institution, you're just not getting the same tax break. S&P's off by 17. We're coming right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We got equities selling off a bit from those highs. We hit over 7,000 this morning. We're trading right now down by 21 points, and we got some selling. S&P is 69.67. The Dow, whether it's Blackstone, I'm just talking about markets over wide, any of those financial, institutional investors, and then, of course, you got the defense stocks. And like I mentioned, they're all $250 billion. RTX. Yeah, General Dynamics, Northrop Grumman, $100 billion. Whew, ginormous companies, gigantic. Dow off by 1% right now. Russell off by about 0.4% right now. So the discussion around Venezuela, they'll be talking about this one for decades and generations, folks. Okay? And yes, the argument is that Biden put him on indicted him, right? And he's a narco criminal. Well, that all goes well, and now we just control the Venezuelan oil sales indefinitely. And so, whether as it goes, we're all aware of the context. I often say context is so important, okay? And if it was just a simple arrest, and now you have one gentleman in jail awaiting trial, this is quite a happenstance that happens to be a result, an unrelated result, right, of the actions that the president has to take unilaterally. The U.S. is going to control Venezuelan oil indefinitely. And, of course, the story's out there, 30 to 50 million barrels, couple $1 billion. I mean, we're pumping out 10 million barrels a day. So, and there it is, yeah. 30 to 50 million barrels of sanctioned oil, and that he's going to direct the energy secretary to carry out his plan for the oil to be taken by storage ships and just drop it off in America. See how it plays out. But they'll be talking about this one for decades regardless. All right, you talk about some valuations, man. AI, it's not slowing down. Anthropic. $350 billion private company. We didn't even have public companies that were $1 trillion going back in the last decade. Now you got private companies. I mean, what's OpenAI going to push? 1.5 trillion. You got Anthropic at 350 billion valuation. They're behind Claude, raising money. And some big players going in there, of course. Last year, AI companies collected a record $222 billion, more than double 2024. And that company only founded in 2021. Whew. And yeah, I always see the ads for coding, right? Really haven't played with Claude a lot, but I do see those coding ads. And it seems like coding is one of the areas that AI is just, I mean, it can do years of work in hours. And you still need the ability to comb it over and perfect it. But from what I read, that's one of the areas that just productivity-wise. Yeah, so OpenAI aiming to raise as much as $100 billion at a valuation of $750 billion before the new investment is what they're looking. My goodness. They need a lot of money to build out those data centers. Yeah, and this one, man, this is a sad one no matter what. Take the ice out of the situation, and you can't, okay? But I happen to see a video of this shooting, and I'm fairly certain it's the correct video, and it's a tragedy, okay? You can always say don't run from the cops, and that's a good idea, okay? But the narrative getting put out after watching this video, man, I mean, this woman was just driving away, and a cop jumped in front of her, pulled out his gun, and then just shot her dead right through the windshield. Okay, go watch the video for yourself. And in this day and age where it seems like you choose the facts, you get the facts, you choose the narrative, you make what it is. Whether you agree with ICE or not, it's illegal to run from police, but you don't just get shot down in cold blood and murdered. And watching the video, that's what happened, okay? And you got the Homeland Secretary, Noem, saying that she tried to run over ICE officers while they were pushing their vehicle that got stuck in the snow. Go watch the video, folks, okay? And remember that a cabinet secretary is telling you that she tried to run over ICE officers as they were pushing their vehicle that got stuck in the snow. And go watch the video. It's not what happened. It's a sad story no matter what. The woman's dead. And it all just started because an ice truck got stuck in the snow. And it seems like they were almost trolling them, mocking them, protesting them, okay? Yeah, causing an uproar. And but nonetheless, it seems like she was just taking off in her car after, causing a little bit of an uproar, right? Causing a problem. Doesn't mean you just get shot dead. Go watch the video. And, I wouldn't be expected that everybody doesn't come to the same conclusion. But, man, seems pretty cut and clear in the day and age of video. Whew. This person dead, 2 shots. Right through, man. All right, and we look at the stocks. In terms of this market right now, NASDAQ 100, the only thing still in the green, and it's the growth stocks, man. NASDAQ up by 10, you get the Dow off 501. We take a look at the Dow. Yeah, look at it. You got Goldman off 1.8%, $938 equity. Caterpillar's off by 4%, your $600 equity. Okay, Honeywell's off 2.6% right now. American Express off 1.6. Some of the most expensive ones out here. UNH off 1.9. JP Morgan off by 2.5%. Jump over the NASDAQ 100. Yeah, Google up by 2%. Look at this. This whole sector. Microsoft up more than a percentage. Palo Alto, Palantir, AppLovin, NVIDIA up by a full percentage point. Intel up 6%. Jump over to Intel shares. Look at this. What do we got going with Intel? Yeah, and TSM was moving today, right? Is that what's going on? Well, to the downside. Okay, TSM's off 2.5%. Intel up 5.9. Let's take a look at the volume. That's some nice volume today. All right, you give up the highs, though. What do we got a high out here? 4402. Man, it'd be nice to get above those highs on a day like today where you got volume. 4402. Ooh, that would. On a monthly basis. Okay, I mean, we just kicked off January. We had light volumes in November and December after this thing plowing higher with all the volatility, with Trump taking 10% of the company. Things calmed down a bit. But we got some nice volume today. Intel up by 5.7%. Oh, and there it goes. NASDAQ gives it up. We got everything in the red right now. Dow off by 510. NASDAQ 100 flat. Stay tuned, folks. We'll come back. We'll look at some metals. We'll come right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years, with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. You talk about bond sales. How about $88 billion? The busiest week of blue chip bond sales in 6 years. Yeah, investment-grade firms, their biggest U.S. borrowing spree since the pandemic-era boom, $88.4 billion this week, the most for any week since May of 2020, when near-zero rates had everybody taking as much debt as they could. The tally, an all-time high for early January, blown past estimates of about $70 billion for what they were looking for. Banks including Morgan Stanley, J.P. Morgan are forecasting a record year for investment-grade bond issuance. They're going to seize on lower borrowing costs to finance mergers and acquisitions and data center build-out. Yeah, that's probably the biggest one, right? Let's push out that debt to the public and build those AI data centers. Also remarkably strong overseas. In Europe, issuers raised a record amount of funds through bond sales on Wednesday. Globally, bond sales for the first time topped $200 billion in the first week of the year. $200 billion globally. Bonds issued Tuesday in the U.S. market attracted orders about 4 times the size of the offering. Wow. A French telecommunications company, Orange SA, maturing in 30 years to demand more than 15 times the issuance. The extra yield issuers typically offer to persuade investors to buy newly issued bonds instead of similar has plunged. Man. All right, you talk about the food pyramid. So the U.S. flips the food pyramid to promote protein and cut added sugar. Well, I happen to agree with this one. And I'm not a doctor, as the disclaimer goes, doing a YouTube program, okay? We are on YouTube, and I'm not a doctor, man. But yeah, healthy fats, okay? And cut that added sugar. I'm always saying there's sugar in everything. When I had Tommy, you're looking at things a little bit closer, and just added sugar. The amount of added sugar. You don't want added sugar. Sugar, a lot of times in fruits, you're buying any type of thing with fruits, there's going to be a lot of sugar in there. Applesauce has a lot of sugar, even without the sugar added, because apples have sugar. Now, sometimes you buy something and they'll have like a fruit concentrate. That's one way that they actually can have no added sugar, but can have a lot of sugar in it as you're getting a fruit concentrate. But bottom line is, it's just natural food, and breads, potatoes, all that stuff, carbs. Yeah, it's still great. Okay, but realistically, a lot of your nutrients are coming from healthy fats, vegetables, fruit, with some carbs in there as well. And, I think we've probably known in general that makes sense. You got Conagra, General Mills, and Kraft Heinz declining. And you know what's wild is, I was just talking, if you're watching the program, all right, let me see if I can find it. Because I was just talking about Kraft's decline. And I think it was a Bloomberg article. Let's see. No, I'll find it. Might have been the Journal. Nope, I got it. It is the Journal. All right, now this was the article, how Kraft Heinz lost its lock on mac and cheese and American shoppers. And check this out. So if you're watching the program, I think it might have been the morning program on Monday. Maybe it was last week. This one here, Goodles, Cheddar Mac, okay? And what this one has is it's got like chickpea pasta as well. You got whole wheat in there. You got veggies. You got 14 grams of protein. Now, the cheese always adds protein. Okay, milk's got protein. Cheese has protein. It's got 7 grams of fiber. That's where it's got probiotics in there as well. And so I went out and I bought it, and Tommy loves it. Yeah, so now we're eating some of that. And Goodles, they're at about 5% of the market. Annie's is in there, private label. Velveeta, we're a fan of Velveeta as well. And then you got Kraft at the top. But that's the shift. So I don't think it's going to be a huge difference today in terms of people seeing that pyramid and making lifelong changes to their diet, but they're facing those problems no matter what. I mean, look at this chart, man. You think today matters? No. Today matters. You're down by 2%, but look at this chart. Oh, how far back do we got to go to get out of this downtrend channel? My goodness, look at this thing. Whew. Hey, maybe this is the Max Payne situation. You know, we're right back to the lows of COVID. Now, you got lows out there at $20, but yeah, $24 is the low of the next month. $24. Yeah, $23.36 was the low in April of 2020. It's your monthly. Let's take a look at the weekly. It's only Wednesday. We'll see what happens. We've already done 50 million shares, but Kraft Heinz under pressure, to put it lightly. Conagra off by 4.4%. They're really invested in the carb-centered snacks. And listen, I love carb-centered snacks, okay? I do. And that doesn't mean do as I say, not as I do, right? But, yeah. And the key is there usually is those lean fats, because, you know, I often joked that I went completely vegan, not just vegetarian, vegan, which is no butter, no cream, nothing like that, okay? For 6 weeks or so, about 4 or 5 years ago. 4 or 5 years ago. 6 weeks, it was great. I was just eating a lot of meat, wanted to go completely. I said I was going vegetarian. I said, you know what, if I'm just going to do this kind of purge, I'm going to go completely vegan. None of that. There's a bunch of great options around. It was actually surprising, though, going into restaurants, how often I'd say, do you have any vegan options? And they wouldn't even know. And just as a business person, there's a lot of people that are vegan. I want to sell them some meals, and you'd at least have 1 or 2 good meals. They had no idea of how. Vegetarian was one thing, but I found out real quickly when I did that butter and cream is in everything. Butter and cream is in everything. So and I joke, but it pretty much was almost impossible, because some form of butter or cream or cheese was almost in every meal, even most of the vegetarian meals. But I often joked, right? And the reason why I ended up stopping was because I didn't have enough options for myself, and there's great options, especially vegetarian. Okay, vegan was a little difficult, not having any type of milk, eggs weren't there. Eggs are so healthy, love eggs. Is that you could actually, I was eating I started it off eating very healthy. I was having a lot of avocados, I was having a lot of salads, a lot of fruit. And then what ended up happening, though, is I ended up making you can go vegan, folks, and you can go eat Tostitos and guacamole all day long. You can go eat peanut butter and banana sandwiches covered in honey all day long, okay? You can go eat pasta covered in pasta sauce all day long, right? So every part of it, you have your healthy and you're not. That's what it is, because vegan's very healthy. But what ended up happening was I wasn't doing it the right way. In the beginning, I was having like bean patties, right? A bean burger. None of that fake meat burger. I was having like a black bean burger. I was having mushroom burgers are great, like a portobello burger, something like that. And I just didn't have enough options. And I just wanted a little bit of flexibility, whether it was a little fish, whether it was a little white meat, and even red meat sometimes. But the food pyramid, and yeah, Conagra. Same thing. Look at these ones, right? Look at Conagra. You like Conagra? Well, you could have liked it at the same price in the late 90s. How about that, man? Oof. Conagra at $16. You were trading at $14 in 1991. You were trading at this price in good old 1996. And look at the volume on this sell-off. All right, folks, one more segment. We'll come right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. Lennar off by 2.4%. Keeping our eye on these home builders. And yeah, I like this area. Keeping my eye. You break below this level, but I'm really close right now. We got no volume in the last 3 days. And think about everything going on. These last 3 weeks, excuse me. And think about everything going on. Okay? Even today, with this type of a news event, you're not even above. Now, we might get a slightly bigger day than we had yesterday. But look at the daily volume today versus everything we did on the way up, especially on Lennar. Okay? You reach a low of 102.72, and like I said, we got to build more houses. Okay, they don't own the houses. Lennar does not own the houses. Now, yes, if you take a huge bidder out of the market, of course it's going to suppress prices. There's going to be less demand. Less people are going to be fighting for the same property and going to have to bid it up, of course. But they have to build the houses, okay? And so, you know, part of that is we'll see where it goes. Rates are going to be a big component, of course, and you're backing down now longer term, okay? I mean, look at where we are, man. You're at 103.81. and you were at 103.42 at the beginning of December 2021, which was the run-up during COVID before the pullback. And then everybody thought they were in trouble, right? And then what ended up happening? They were the only game in town when nobody else could sell their house because they were locked into interest rates. But they could sell their house because they do not keep inventory, folks. Okay? I've been talking about many times. One development in Bartow, Lakeland area, 1,800 houses. Okay? It's Lennar and D.R. Horton. It's a joint venture. I think it's called Wind Meadows South, something like that. Look it up. Wind Meadows, okay? 1,800 houses. I think it's technically in Bartow, Florida or Lakeland. And the point is, they just keep selling them, man. Okay? Now, when they just came out with their earnings, it was a big problem. Because guess what? This action right here, they had to sell them, and what are they doing? They're subsidizing that sales, it's hurting margins, etc. But guess what? They don't hold houses. So you have a lot of reaction today, but we'll see if it plays out. Who knows? This could end up being a good thing for home builders, as it should be. You got to incentivize the home builders if houses got to get built. Folks, thanks so much for tuning in. S&P's off by 27. Have a great night. Have a safe night, folks. Thanks so much. We'll see you